I want to cover some gains and losses that you learned way back in Principles of Financial Accounting that you need to know really, really well before we move forward with anything in tax. And even if you think you don't need to cover this, you probably do. I can tell you because I grade a lot of these on the first few chapters of my quizzes to get you guys back in that shape. And it's just something you forget or it's easy to make a simple mistake. So please watch this and go through this with me. All right, I've got some equipment that we bought on January 1st of year one for 100 grand, 10-year life, no salvage value. I'm doing this from a financial accounting standpoint, but we don't ever use salvage value or residual value in tax, so I didn't give it any of that. And we're just going to use plain old straight line, easy peasy depreciation. We can easily go 100,000 by 10 years is we're going to take $10,000 of depreciation a year, right? 10K per year. All right, the first mistake that I see students make a lot is looking at how long we've held this. Whether I say we sold it on December 31st or of year three or January 1st of year four, how long did we hold this asset before we sell it? Y'all, count on your fingers. People miss this so often and go, well, we held it for all of year one, all of year two, and all of year three. That's it. If we sell it on January 1st of year four, I didn't hold it any longer than 3 years. So whether you've got to write those years out and count or what, I see lots of mistakes based on just that. All right, we've held it for 3 years. The first step you want to do is figure out how much accumulated depreciation have we accumulated? 10, 20, 30. I don't really, other than if you mess up the year, that's fine with people. Everybody's good at this. So times 3 years equals 30K of accumulated depreciation. Oh, I didn't give you a selling price on this, did I? Let's say we sold it for $60,000. Okay, here is the most common mistake I see students make. They find the $30,000 of accumulated depreciation and they go, okay, 60 minus 30, I got myself $30,000 gain. No, you don't. What is the formula for finding a gain or a loss? We take our selling price minus what? Not minus accumulated depreciation, minus book value. So our selling price is 60,000. What is my book value? How do I find that? Well, we can do it real easy in our head here, but I want you to get used to labeling things because when we think numbers are easy in our head, you tend to smush together steps and mess it up. So I need to come over here and find book value. It's my original cost of 100 minus that accumulated depreciation of 30. Oh, my book value is $70,000. Again, most common mistake I get is that people plug in this. So 2 steps. First find book value, then do your selling price minus book value. So I've got a $10,000 loss. What is the other common mistake I see? I see students flipping this, taking book value minus the selling price. And no, it's what's it on our books at? If you sell it for more than that, you have a gain. Less than that, you have a loss. Okay, now let's convert this to some tax terms. What do we call the selling price in tax? We call it the amount realized. So sometimes if my students are reading a test question, they get that confused with what we call a realized gain. Eraser. Realized gain or realized loss. So in this case, I'm going to say realized gain or loss. Of course, it's a loss. So be careful what the question's asking you. If they're just asking for the amount realized, it's your selling price. Now we've got a little bit more to learn on that, and we'll learn later what this can change by if we get some property liability relief, different things like that. But amount realized is basically your selling price minus what we call book value. In tax, we call it minus our adjusted basis. And that should make sense, right? Here was our original basis, and then we adjusted it by reducing that accumulated depreciation. So its adjusted basis is now 70. And then again, if you come up with a negative number, if you've sold it for less than your adjusted basis, you're going to have a loss. If you sell it for more than that adjusted basis, you're going to have a gain. Okay, hope that helps. Get really good at that, and we'll just keep adding to that all semester.